We have an email from Nick, and the subject is Caterpillar, the uber cyclical. What's your opinion on this stock? Is it a buy at this level?
Okay, so Caterpillar is going to behave much like emerging markets and much like the commodity space. And while I know it's been very difficult so far, this is very close to the epicenter of the problem in the market. Caterpillar is likely, I think, to continue to be under pressure, even if commodity prices bottom, which I don't think is happening soon. They're likely to remain weak for a long period of time. There have been very few restructurings. Very little of the debt that's coming due has been dealt with. And so it's likely to be a tough environment for commodity pricing for a long time, which means probably Caterpillar will have some time before demand really comes back in a big way for the products. So I think there's better places to be than industrials and specifically Caterpillar.
Okay, let's head to Hamilton, Ontario. Henry wants to ask about a consumer stock. Go ahead, Henry.
Good afternoon, gentlemen.
Good afternoon.
Priceline. It was up at 14 and a quarter, down around 1100. Good value or value trap? And Andrew, where is the 200-day, if you could let me know, please? Thank you. Have a good afternoon.
On that particular stock, I will do my best. Technical analysis, not my forte, but I'll have a go.
So, first of all, as far as sectors go, 80% of return comes from getting to the right market and getting to the sectors within that market that benefit from whatever the secular shift is that's taking place. So if our base belief is that the consumer is the ultimate winner in this environment, and if our belief is that the consumer will spend money on experiences, which they're doing, travel and leisure is a group you want to have a look at. Now, if I had to pick one company in travel and leisure, I'd probably look at Carnival Cruise Lines, which has been remarkably resilient in the face of this weakness. But if you look at the long-term chart of Priceline basically has been correcting and consolidating over the last 14 or 16 months. Stocks pulled back. It's into support. It's in the right group. I'm not sure that this is the first one that I'd go and buy, but it is one that I would certainly have on the list and look for a reversal. It's behaved better than 60% of stocks over the last 12 months in the U.S. market. So I like the group. I like the market itself. I might prefer to look at something like Carnival Cruise Lines, but I don't have a problem with Priceline. Okay,
so on the 200-day moving average, my numbers here, and I'm not saying they're definitive, show 1248 being the 200 moving day average price, and of course the stock's now at 1098, so it's well below its 200-day MA.
It absolutely is, and it's held in and around these levels a number of times. So, on the long-term chart, there's some support here. In the short term, you'd like to see the stock get going, and you'd like to see the revisions on earnings start to get revised higher.
Because when I'm talking about Priceline, of course, when a stock breaks through its moving average on the way down, that's often seen as a bad sign.
Yep, it's not a positive sign overall.
Let's head to Toronto. Dorothy's on the line. Go ahead, Dorothy.
Good afternoon. I wanted to ask about NXP Semiconductors. They've got an interesting niche in the semi space. Wondering what your current outlook is on it, or in terms of the technology space, would you rather be in something like internet security?
Okay. Dorothy, great question. So the semiconductors were really one of the most resilient sectors in the market leading up to the ultimate crack in December. NXPI topped out last June and has been making lower highs since then. I like the technology, right? Near-field communications is a great technology. But I will say that there might be better spots. If I was looking at semiconductors today, I would probably be looking to buy, first of all, being that we still believe we're in a correction in this market, I would be looking something like NVIDIA, which has behaved certainly better and held up better. It has pulled back, but it's pulled back within trend. Or in the capital equipment space, KLA 10 Core also is behaving much better than the group. So those would be the two strongest that I think in the semiconductor space. I still think as we go through this correction, there's still some risk in the short run, but it is a group that generally turns higher quickly as the market starts to find a footing.
Okay, we are going to have plenty more from David Burrows, President and Chief Investment Strategist at Barometer Capital Management. He's answering your questions on North American large caps. The number 1-855-326-6266.